MMC Corp shareholders have approved the plan put forward by controlling shareholder Tan Sri Syed Mokhtar Albukhary to take the company private. According to MMC, 99.75% of the shareholders voted in favour of the privatisation exercise in an EGM that was held today. To recap, Syed Mokhtar on June 3rd via his private vehicle, a Seaport Terminal Johor, which owns 51.76% in MMC, announced his plans to take the company private via a selective capital reduction exercise at RM2 per share. This puts the price tag for the rest of MMC that he doesn't own at 2.94 billion. The SCR was being done to allow greater flexibility to MMC in managing and developing its existing business, while exploring opportunities without regulatory restrictions and compliance costs associated with its listing status. When contacted, MMC's second largest shareholder, Pemodelan Nasional, says that it was supportive of the SCR as it provides an opportunity to cleanly monetize a long-held investment at a 73.6% premium to the undisturbed market price. PNB, which holds 29.97% in MMC, says it will reinvest the proceeds consistent with its strategy of greater diversification across multiple asset classes. Earlier this month, independent advisor Alliance IB had deemed the proposal SCR as not fair, as the offer price is lower than the estimated value of between RM3.32 and RM3.41. However, the advisor is of the view that the proposal is reasonable on grounds that MMC shares had not traded above the offer price over the past 3 years. MMC's share price closed 5.4% up, a touch below the offer price at RM1.95. It was one of Bursa Malaysia's most active, with almost 77 million shares changing hands. The government currently has no plans to impose a windfall profit levy on rubber glove producers or any other business that generated large profits during the pandemic. Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz, in a written response in Parliament to Muar MP Syed Saddiq Syed Abdul Rahman, said that the windfall levy is currently only being charged on palm oil fruit commodity. Zafrul said that the rubber glove industry also contributed through spillover effects to the national economy in terms of direct and indirect taxes, especially given the higher corporate tax. He adds that this on top of being able to continue to provide employment opportunities during the COVID-19 crisis. Concerns over whether the government could be mulling the imposition of a windfall tax came under the limelight recently after there was a mention of a second reading of the Windfall Profit Levy Amendment Bill 2020 in the Parliament Order paper published on September 14th, 2021. In addition, it was reported that the government is contemplating the implementation of a one-off higher tax rate on companies that have generated extraordinary profits during the pandemic. Sapura Energy reported its third straight quarter of losses due to recognition of foreseeable losses and higher project costs. For the second quarter of FY22, Sapura reported a net loss of 1.52 billion compared with a net profit of 23.74 million the year before. Revenue declined 39% year-on-year to 747.1 million. For the first half, the group registered a net loss of 1.61 billion versus a net profit of 38 million the year before, as revenue dropped 14% to 2.22 billion from 2.58 billion. In a statement, Group CEO Datuk Muhammad Anwar Taib said Sapura bore the brunt of both the direct and indirect costs of the COVID-19 pandemic. He says that while the company is currently negotiating amicable solutions with its clients, given these extraordinary times, most are cautious and reluctant to resolve claims quickly. Sapura estimates that cumulated COVID-19 direct costs have escalated to 397 million as of second quarter, while 111 million incurred in the first half of FY22. Going forward, the oil and gas player is expecting the current hurdles and uncertainties to continue. Anwar explains that turnaround efforts have also been hampered by liquidity concerns and that Sapura is now engaging with parties and lenders on short and long-term portfolio actions to expedite improvements in cash flow and debt. Top Glove Corp Executive Chairman Tan Sri Dr. Lim Wee Chai has bought shares in the company for the first time in about 3 months, according to boss filings. Lim's direct shareholding in Top Glove rose to 26.96% after he bought 3 million shares last Thursday. This transaction on September 23rd was Lim's first reported share buy in the glove maker in about 3 months since late June. This comes as Top Glove's share price closed below RM3 on September 20th as investors weighed the outlook of the glove industry versus the global progress of COVID-19 vaccinations. This has led to a drop in share prices of glove manufacturers, including Top Glove, as average selling prices come down. Top Glove's counter actually ended the day 4.3% higher at RM2.88. Datuk Sri Najib Razak's former Principal Private Secretary Tan Sri Shukri Salih said that the former Premier had ordered him to instruct the National Audit Department to drop certain sensitive information from the 1MDB audit report in 2016. This included fugitive Low-Tech Joe's involvement in the fund. Shukri testified at the 1MDB audit tampering trial at the High Court on Thursday. He said Najib summoned him and gave him the order on February 26, 2016, and he followed through by informing then NAD Director Sadatul Nafisah Bashir Ahmad. Shukri testified in early February 2016, Najib had asked him to obtain the audit report on 1MDB from former AG Tan Sri Amrin Puang because it needed to be checked before it's printed. Despite early hesitation from Amrin, Shukri managed to obtain the report from the NAD and handed it to former 1MDB CEO Arul Kandasamy. It was during a meeting on February 24th that decisions were made to remove or change certain parts of the audit report, including omitting the existence of 1MDB's 2 conflicting financial statements for 2014.